Our next speaker this morning is from the commercial real estate sector, and here to talk to us about commercial, industrial, and office markets is the Vice President from CB Richard Ellis in the Manchester office, Roger Dieker.
All right, thank you, Sean, and good morning. It's a pleasure to be here, and even though the short-term forecast for commercial real estate may not be considered rosy, I'll try to give you some ideas to capitalize on this opportunity. This presentation will be focused primarily on the overall industrial and commercial markets, but for a more detailed analysis, you have the updated 2009 market survey. I know my fellow brokers will not find the humor in this first slide, but it will be how many will remember it. If you think back a year, we were 4 to 5 months into the financial crisis, and the credit markets were described as frozen. The Dow was below 7,000. We're here a year later, the Dow's above 10,000. So we all know things are cyclical, and the majority of people are too optimistic when things are good and too pessimistic when things are bad. 2010 will be a year when people are too pessimistic. Just as many stock market investors took advantage of the dip in the market, many real estate investors are looking at this as an opportunity to buy commercial property throughout 2010 at depressed prices. Sellers are looking at this from the opposite perspective. Owners of commercial properties are seeing their appraised values decline steadily, and appraisers are struggling to find recent sale comps. An example of a deeply discounted sale in 2009 is the 103,000 square foot Thermo Fisher facility in Hampton. It sold for $33 a foot, $3.4 million. A 42,000 square foot building here in Manchester, the former API facility, sold for $28 a foot, or $1.2 million. And the bargains are not over. We have a developer's closeout auction in Derry scheduled for February 5th. The 13,000 square foot new construction industrial condo will be sold to the highest bidder above $600,000. That's $44 per square foot and over 50% discount from neighboring units that sold as recent as 2008. The number of bidders and the final bid amount will tell us a lot about where we are in this cycle. Prices will eventually trend upward, but the million-dollar question is, when? The next chart will help us to see when that recovery may occur. This is the unemployment rate for southern New Hampshire, Manchester in the red, Rockingham County in yellow, and the entire United States in blue. The employment rate is the driving force for the demand for commercial space. Not only do employees work in office, industrial, and retail properties, but the unemployed or the underemployed tighten their belts and reduce spending. You can see the increases in unemployment, which started in 2008, begin to reverse mid-2010. Once we see the lower employment numbers, you will begin to see the reversal in the slide in commercial real estate pricing. The lack of demand, if fewer factory workers, has kept the vacancy rate here in southern New Hampshire at 13%. Downsizing office users has increased the office vacancy rate from 16.7 to 15% versus last year. Just as in the unemployment figures, New Hampshire is in better shape than many parts of the country. The northern Massachusetts vacancy rates, for example, are 28% in industrial and 25% for office. So the next time you hear the dire predictions in the national media, you may want to look a little closer to see how New Hampshire may be faring differently. So if your business is stable and you agree with my premise that prices will reverse at some point, but you're not in a position to purchase a property, what can you do? Many of our tenant clients that can make long-term commitments to the real estate engage us to approach their landlords to request a lower rent rate for a longer lease term. Every situation is different, but this blend and extend, as it's called, can be a win-win situation for both the tenant and the landlord. The tenant receives a reduction in their rent, while the landlord secures their tenancy, avoids a potential vacancy at the end of the lease, and can use that extended lease term to refinance the property. Refinancing is important to a landlord because commercial properties are usually financed for a shorter term than residential. This last slide breaks down the projected refinancing of large commercial properties. You may hear of huge problems in the near future with over half of the country's large commercial mortgages needing to be refinanced in 2010. Here in New England, only 11% of these large properties need to be refinanced. If your debt requires refinancing in the next couple of years, your relationship with your banker is going to be very important. I know Diane would be happy to talk about refinancing, but your current banker may have some questions for you. These questions could be related to the decline in the appraised value for your property, as well as the stricter lending parameters that may require some increased equity. Having a strong relationship with your banker will be a big help in resolving some of those issues. In closing, 2010 should be the turnaround year for commercial real estate. Refinancing will be the wild card and something we need to watch. And if the refinancing does not go well and you begin to see a wave of bank-owned properties on the market, fasten your seatbelt for a bumpy ride. And as Martha Coakley will tell you, nothing is certain.